Hey everybody, Ryan Carson here. Wanted to give you some tips and tricks for potentially saving the probate tax, or estate administration tax as it now is called. Just to make sure everybody knows, that is a 1.5% administrative tax that the government levies on any estate assets in the province of Ontario. So for example, if you had net assets of your estate at a value of $1 million at 1.5% tax, you'd have $15,000 of administrative tax to pay to the court for that estate. So some tips and tricks to potentially minimize or avoid this tax altogether are as follows. One, you can have it set up so that bank accounts that are currently owned just by one person could have joint ownership. So if you have joint ownership on a bank account with somebody else and you pass away and that other person is surviving you, and the intention is for that person to be the one to inherit all that money, that is a tip or a trick to avoid any sort of estate administration tax. The other thing that you could do as a tip or a trick is with any real estate property that you have, whether it's a personal home or a investment property or cottage, but it's real estate property, if you only own it in a single name as a sole owner, or you own it with somebody else but you own it not as a joint tenant but as a tenant in common on your deed, if you change that ownership to joint tenants, you all have to be equal owners. So if there's two of you, 50%, three of you, a third, four, a quarter, and so forth. So equal ownership has to be applied in those situations of joint tenancy. And with that, there would be a survivorship when one or all the parties die, except one person. That surviving joint tenancy owner of the real estate property will be the sole owner then of the property, and thus the property would not have any sort of estate administration tax on its value. Other things that you can do as well is with any sort of investments you have, if they are RRSPs, if they are TFSAs, if they are unregistered investments, if you have segregated funds, if you have plain vanilla insurance like life insurance and so forth, all of those different types of investments and insurance products can typically have named beneficiaries directly within the policies of investment or insurance themselves. The net value of those investments and or insurance could flow to the named beneficiary, again bypassing the estate administration tax. So the trick would be you're saving that tax, which is nice because it probably means more money in the hands of your beneficiaries at the end of the day. And administratively, the paperwork should move much quicker than if those assets don't have named beneficiaries and they're tied up in the actual administration of the estate itself. You know, if we can reduce the amount of tax we pay to the government and keep that money in our own pockets or the pockets of our beneficiaries, or pass it along to charitable beneficiaries, I think that's a better use and a better plan for our money than just handing it over to the government to potentially use in a different way or misuse, or both. So those are some tips or tricks to avoiding and or reducing the cost of your estate administration tax, aka probate tax. If you want to talk about it further, let us know. At a very high level, generally speaking, everybody's specific situation should be discussed in greater detail to make sure that this is appropriate for you to take advantage of. Okay, take care, all the best.